Welcome back to my channel. Today we're diving into a story that could define the next big move in the crypto market. Kaspa is sitting at a point where things could swing dramatically in either direction. Over the next 72 hours, the combination of whale accumulation, massive short positions, and critical technical signals could create one of the most explosive setups we've seen in months. Most retail traders haven't even noticed what's happening. But the smart money already has, and that should tell us everything we need to know. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Right now, Kaspa finds itself standing at a pivotal crossroads. What happens next could either serve as a powerful confirmation for long-term believers or completely shatter the confidence of those who have been holding through the ups and downs. The truth is, the numbers don't lie, and neither do whale wallets that quietly shift millions of tokens without much chatter. Recently, a massive move of around 2 million Kas was made in near silence, and when you combine that with the signals coming from derivatives markets, it sets the stage for the next 72 hours to potentially reshape not just Kaspa's path, but the entire short-term landscape for altcoins. Kaspa has never been just another cryptocurrency, simply riding Bitcoin's shadow. It was built with proof-of-work foundations, but enhanced by BlockDAG technology that allows for incredible speed, security, and scalability. Compared to traditional blockchains like Bitcoin that process blocks sequentially, Kaspa's architecture can process multiple blocks simultaneously, almost like moving from dial-up internet to high-speed fiber. Yet, right now, technical brilliance alone doesn't determine market movement. The real storm is brewing in the world of derivatives, liquidations, and leveraged bets. At precisely $0.009, a massive wall of short positions has been sitting in wait. To put it in perspective, there are more than $35 million in shorts clustered there, like dominoes that only need a single push to fall one after another. That's staggering when you realize Kaspa's typical daily trading volume hovers between $15 million and $20 million. On a good day, that kind of liquidation could represent nearly double the coin's average market activity. In other words, one strong move could flip the entire structure upside down and spark a chain reaction. This isn't normal market movement. It's the kind of setup that gives whales and big traders the ability to weaponize liquidity against retail participants. Meanwhile, while everyday traders argue online about whether Kas is destined to moon or collapse, the real money is moving quietly. A recent transfer of 2 million Kas from Kraken wasn't about dumping tokens, it was about accumulation. The wallet behind this transfer now controls more than 256 million tokens, worth over $20 million at today's prices. This isn't the behavior of a casual speculator tossing in pocket change. This looks like the calculated move of institutional capital quietly building a position while most people are distracted. The timing couldn't be more suspicious. Heavy accumulation right before a possible short squeeze. Either this is one of the biggest coincidences in recent crypto history, or someone with deep insight is preparing for a very specific event. The traders at Scape Squad pointed out something very important on social platforms. The recent dip wasn't panic-driven selling, it was strategic. The decline to $0.0728 wasn't capitulation, it was a setup. Retail investors saw the red candles and panicked. But whales use the fear to buy at discounted prices. This is a repeating cycle in markets. The crowd sells in fear, while the strong hands accumulate quietly in preparation for the next rally. Why now? Because weekends are notorious for extreme volatility in crypto. With lower trading volume, fewer institutions active, and retail FOMO taking over, price swings can become amplified. If you're preparing to accumulate before a breakout, you want to do it during weekdays when volume is thicker, impact is lower, and panic doesn't dominate. Then, once positioning is secure, you let natural market mechanics do the rest. It's a beautifully simple strategy. Push the price lower, scoop up at support, and let technical breakouts handle the rally phase. From a charting perspective, Kaspa is also showing something fascinating. On the daily chart, a bearish butterfly harmonic pattern is forming, Despite its intimidating name, this pattern often leads to strong bullish continuations during its CD leg. The pattern began at $0.1315, dropped to point A, rallied to B, and retraced to C near $0.0728. Now, Kaspa sits around $0.0812 at the very beginning of the CD leg. If this structure plays out, the reversal zone points to $0.1508 to $0.1755, levels calculated using Fibonacci extensions of 1.272 to 1.618. These numbers aren't guesses. They're derived from decades of mathematical analysis of market behavior. But before dreaming about $0.15, there's a key resistance zone at $0.086. The 200-day moving average lies here, acting like a bouncer at the entrance to an exclusive club. Break above this line, close above it, and suddenly what was resistance becomes support. That kind of breakout isn't just psychological. It activates algorithmic trading systems. Trend-following bots, momentum strategies, and institutional models all begin buying once the 200-day flips. That's when the liquidation cascade I mentioned earlier could come alive. As shorts begin to feel the squeeze, covering accelerates, fueling more buying pressure. It's a feedback loop that turns a quiet technical breakout into a full-blown squeeze. And let's not forget the broader environment. Ethereum is holding strong above $4,300 even after pulling back from nearly $5,000. When Ethereum stabilizes after a huge move, it usually signals that capital is rotating into smaller altcoins. Kaspa stands to benefit in two ways. First, it's still off the radar for many institutions, giving it room to appreciate before heavy profit-taking begins. Second, its proof-of-work foundation makes it attractive to Bitcoin maximalists searching for scalable alternatives with similar security guarantees. The market right now is showing strong signals across several sectors. DeFi tokens are bouncing back, Layer 1 competitors are gaining steam, and even meme coins are seeing liquidity flows. In this kind of bullish environment, a project like Kaspa, which combines technical superiority with visible whale accumulation, becomes extremely attractive to serious traders. Some have even suggested Kaspa could climb into the top 3 cryptocurrencies by market cap. At first glance, that sounds wild, but let's break it down. With a market cap of around $2 billion, Kaspa would need roughly 10x to 15x growth to compete with the biggest names. Impossible? Not at all. Solana went from $3 billion to $100 billion in less than 2 years. Cardano hit $90 billion at its peak. Even Dogecoin, fueled almost entirely by memes, briefly touched $90 billion during the last bull run. Unlike those, Kaspa has real technological innovations driving its potential, from 1-second block times to its BlockDAG scalability. The challenge is that most retail investors don't see this setup clearly. They see a coin that has dropped over 80% from its all-time highs and assume it's dead money. They don't understand harmonic patterns, wallet accumulation signals, or the significance of derivatives positioning. While retail chases hype coins or influencer calls on social platforms, smart money is quietly preparing. This ignorance creates opportunity for contrarian investors who can separate emotion from analysis. Of course, nothing in crypto is guaranteed. Markets have a way of humbling even the most confident analysts. But when you connect the dots, the liquidation wall at $0.009, the accumulation of over 256 million tokens by a single wallet, the harmonic pattern pointing to $0.15, and the broader strength of the altcoin market, it's hard not to see potential. Kaspa is in a rare moment where technical setups, whale activity, and market sentiment align. The next 72 hours could be explosive. If resistance at $0.086 breaks, the door opens for a squeeze that pushes KS into double-digit cents. While retail argues and hesitates, smart money has already made its move. For those paying attention, this may be one of the defining opportunities of the current market cycle. Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.